Welcome to the Thinking the Unthinkable podcast, our latest leadership conversation. Hello, I'm Nik Gowing. We continue to want to highlight positive evidence that the transition from fossil fuels is really underway and is really picking up pace. So in these 18 minutes, we're going to highlight signs that the old energy order is quietly receding. There is a contraction by design going on. Fossil fuel producers are not doubling down on production. In fact, they are stepping back from energy growth altogether. Who says this? Well, it's the Carbon Tracker Initiative. That's a non-profit think tank, best known for its work on stranded assets and the carbon bubble. CTI carries out in-depth analysis on the impact of the energy transition on capital markets. The founder and director is Mark Campanale. A warm welcome, Mark. Welcome. You say the slow withdrawal, and I'm quoting here, of oil majors from energy growth is underway, but I have to say that really isn't the impression.
Thanks, Nick. Well, there's so much good news here to share, but where to start? The first is that the cost of energy, the levelized cost of energy from renewables, just keeps dropping, keeps falling. A lot of it's driven by China, China's superior technologies around solar and electric vehicles in particular. And what this is doing is it's making oil producers sort of sit up and say, well, look, EV sales in China hit more than 50% in the last couple of months. Just in the UK, electric vehicle sales of all sales just passed 34% last month, up from just a few percent just a few years ago. And they're wondering, does this mean we're going to see a major fall in oil demand? And I suspect they're already answering their own question. And they're answering their own question when you look at oil reserves life of the oil majors. So companies like Shell, Chevron, and BP are all coming in well under 10 years of reserves life, and they're just not replacing that with new exploration and new investment. So
But
that's the real signpost for us to look at. Are they replacing every barrel of oil they sell today with new oil barrels in a decade out? And the answer to that is no.
But let me quote back to you that quote that I put right at the beginning. Not collapse, but contraction by design. What's going on there?
Well, just to sort of go over the sort of some of the obvious is that every time you sell a barrel of oil as an oil company, you have to replace that with new oil because it does it doesn't appear from nowhere. You have to go out, explore for it, travel across the other side of the world, sink a few exploratory wells, and see what you can find. And whilst that was very, very common, a decade ago or even less, today that's not now common. So they're not actually investing in new exploration and production to find new wells. And that investment that we saw, just a few years ago has dropped significantly. And instead, what the companies are doing is they are paying out the cash that they're making in the form of dividends and share buybacks, buying back their own shares. And so I think what you're pointing to, the question, Nick, is why is that? And I think the answer to that is the future for oil and gas is very uncertain now because we've got great alternatives. The electric vehicle being the obvious one, wind and solar and batteries instead of gas-fired power being the other.
But what I'm trying to get at is what your analysis and what you've published really says. And it says the oil and gas sector is being reshaped by forces it neither leads or controls. Rather than obstructing the transition, oil companies are increasingly exiting it, quote, handing energy's future to other actors. This is a seismic shift.
Yeah, I think that's right. I mean, let's be clear. The skills required to run an oil company are not the skills needed to make, which is basically electronics skills to make solar and wind and battery storage. So they just don't have the expertise or the knowledge. Running ships out into the ocean and sinking oil wells is a very, very different business to the mass manufacture of electric vehicles. So we have seen some companies, BP, Shell, Total, invest in new technologies. But as we all know, in the last year, companies like Shell and BP have sort of dialed right back from their renewables business and have decided, in some cases, not all of them, to exit or sell off their renewable energy divisions and just go back to what they always were, which is oil companies, albeit they're becoming smaller and they're not investing and getting bigger. And I think that just tells us we're right on the cusp of a very major, significant change. It's a new industrial revolution that we're seeing. The technology of the internal combustion engine hasn't changed very much in the last 150, 200 years, but in the last decade, in comes new technologies around battery storage, around electric vehicles, and there's been quite a remarkable change. The traditional car, hundreds of different operating parts, the pistons and valves and pumps and so on. Whereas an electric vehicle is a lot simpler, a lot less moving parts, a lot more efficient conversion of energy to movement, and these things are coming in cheaper. I think I'm right in saying that the sale price of an electric vehicle in China is now around $15,000, and people are trying to bring cars into Europe at below $20,000. In Europe, we can't make traditional cars for that price. And so these new technologies, they're cheaper, they're more efficient, they're more reliable, they convert energy better. And this, I think, rings the death knell for the traditional car sector as we know it.
But you're making very strategic assertions here. The growth phase of hydrocarbons is effectively over, and I'm quoting you here. Oil majors now see themselves as extractors of value from legacy portfolios. In other words, something very different to what we naturally assume they're in business for.
Well, that's right. So there seems to be what's happening is they're selling off their last barrels of oil, which they convert to petroleum products. They're not replacing those reserves and for the future. Instead of investing in alternative technologies, they are paying out the money they make in the form of dividends. And there's a bit of a sort of a wait and see going on. I mean, the papers right now, the last few weeks are, well, does Shell merge with BP? What happens to these companies? It's a very uncertain time if you're an employee of a large oil and gas company, as these new technologies come in and replace you. And we can see it every day. The numbers of electric vehicles on the road, the solar panels being built around the world. China's just putting on huge amounts of solar and wind. Other countries around the world are doing the same. We're right in the middle of an extraordinary energy transition and a shift to this low carbon future.
Let me check in with you on another thing you say very clearly. Fossil fuel companies, to quote, are no longer growth plays. No longer growth plays, which is what the market has always assumed. They should be evaluated as finite life cash vehicles. What do you mean by that?
Yeah, so you've got 10 years of oil and gas reserves left. You're not replacing them. You're running yourself down. And as you run yourself down, the profits that you make, which could still be considerable, by the way, you're just paying it out to your shareholders, and the shareholders are having to figure out what you're going to do. We call it contract to grow. So they're contracting, becoming smaller, but the bit that they're trying to protect and grow is their profits, their dividends, as they get smaller. So, if you don't invest in new exploration, you're kind of saving money. And that saved money you could use for other purposes. And what we're seeing is that they're instead paying it out to shareholders. So it's a good time if you're a shareholder of these oil companies that we have around, some of the largest companies on the UK stock market, but they're not going to look the same in 5 years' time, 6 years' time. And that really is the interesting question. What happens next? Do new energy companies come through? Big businesses like Octopus Renewables, do you come through and actually replace the Shells and the BPs that we see today? And that, I suspect, is what's going to happen.
Because you have another intriguing phrase here. Oil companies are opting to shrink gracefully rather than overextend. In other words, they want to get smaller rather than keep pushing for these fields elsewhere.
I think that's right. Now, one thing, one thing we'll have to say about energy, is there's two halves to the energy equation, Nick. We're used to putting a fuel in a car. We go to the end of the road, we find a petrol station, we fill our car up with petrol, and away we go. But in this new energy system where we can plug in the car and power ourselves at home or at the workplace or at the supermarket, wherever we go, one half of the equation disappears. We're not going to be needing to bring liquid fuels from one side of the world to the other, which is, as we know, hugely expensive. Just look at the economics of oil and gas. You're having to go out into the Arctic, into ultra deep water. You're going to have to put up these huge oil rigs. You're going to have to explore. If you're lucky, you find something, you have to bring it up to the Earth's surface, put it through pipes or onshore, refine it, put it into a tanker, transport it through very, very dangerous parts of the world, like the Gates of Hormuz, to one side of the world to the other, refine it, put it into a petrol tanker, take it up the motorway, put it into a petrol station up the motorway or wherever it might be. It's expensive, it's time consuming, it's complex, the logistics. Now in the new energy system, all of that disappears. You manufacture your energy from the sun, you capture it in batteries or through the grid system, and you deliver it much more efficiently at the point of use. So the one half of the energy system just completely disappears. So the other thing to point out is the energy system gets smaller, because we don't need the complexity of moving oil and gas or, of course, coal from one side of the world to the other. You can make your energy almost at the point of use. And in the UK, we've got fabulous sources of cheap energy in the form of offshore wind, particularly in Scotland. And once we know how to move it around the UK by improving our grid system, our expectation is going to get cheaper. Once you burn a barrel of oil, you have to replace it. Now, in the case of wind or solar, your energy is perpetual and it's free forever. Sunlight, you can't create a forward price for wind or for sun. It's always there and always free. So long as you can store it at nighttime and in the home, you'll pretty much solve the energy equation. So this is what we've got to look forward to, is a new world of pollution, almost pollution-free energy, that becomes cheap and cheaper, is the lesson that we've learned from technological innovation.
What I'm wondering about the markets, and you've warned for a long time, even though it wasn't fashionable to do so, about legacy portfolios, about investments in legacy investments which simply won't have a value eventually. And you've got a fascinating phrase here. They are learning how to shrink gracefully or liquidate quietly. In other words, is the market now realizing the enormity of strategic change which is underway in the traditional fossil fuel companies, the likes of the giants like Exxon and Aramco?
Well, they are, and financial markets. And I spent 20 years in the investment industry. You value companies and you try and work out what they're going to be doing in the future. And the market is valuing these oil companies at very low multiples, just 4, 5, 6 times next year's earnings. And the companies like Nvidia and IT companies are valued on a much, much higher ratio multiple, 30, 40, 50 times future earnings. And so this is the way that the market is saying, look, we don't value these oil companies for the future. We're looking at other areas of the economy like technology, artificial intelligence for our growth. And to a large extent, the market is already what's called derated these companies. They're not valuing them for future growth at all. And they're looking elsewhere to find the next opportunity. And that really marks a huge change in the energy sector that we've seen. This sort of sense that the future is already here, Nick. We can see it around us in the form of new technologies. And they've accepted that these are technologies of the past. And we're now going through this very, very bumpy phase as the world changes and we get used to it. And it has implications because, of course, one of the things that happens is you have to decommission your oil rigs. You have to close down your coal-fired power stations.
Mark, you raise an important question, though, about how messy, your word, how messy this is going to be. Do you think people realize how messy this might turn out to be, and therefore how rapid the almost a decompression might be?
I don't think they do. And the biggest risk of falling demand for the oil sector is falling prices. Falling prices is great for the consumer, but not for companies. All the cheap, easy to find oil and gas has largely been found. You're constantly having, as an oil company, to go to other parts of the world. And the costs of production are still relatively high for many of the companies. So, if your break-even price is $30, $40 a barrel, you really need oil to be at $50, $60, $70 a barrel to get the returns that investors want to see. If oil prices stay low, and they peaked during when there was the attack on Iran just a few weeks ago, oil prices went up to $70 dollars a barrel plus. But when things stabilized politically very quickly, oil prices kept down, brought down to around 60. Now, one of the reasons why oil companies are not investing in a lot of new projects is because they're expensive. They're expensive to develop, and they have what are called high break-even prices, the cost of getting out of the ground versus how much you can make for selling it. And this is creating a lot of nervousness. So nervousness for traders, the market, companies, and of course their shareholders.
We've got a couple of minutes left, Mark. Give me your overarching prediction of where this is now going and how speedily this is happening. Because it would seem to me that based on the kind of thing that I've been reading about your analysis, you're talking about a watershed which is now being crossed. But people don't quite realize what's happening, even though demand for oil is still going up.
Yeah, we're at that, close to that watershed at the moment. The International Energy Agency is forecasting that we'll lose, we'll lose around 5 million barrels of oil demand a day by 2030, so 5 years' time. And every 20 million electric vehicles on the road, we lose about 1 million barrels of oil demand a day.
We talked about a watershed. Maybe we should talk about an oil shed in terms of the change that is underway. Would you say that this gives grounds for a degree of positivism and optimism when it comes to the transition that is necessary to meet the kind of net zero targets, even though there are still political reasons why that's going to be so difficult?
There's a lot of optimism out there. So with just the UK figures, up to 34% of new car sales being electric, I wouldn't be surprised if we pass 50% within about 3 or 4 years' time. And this creates a huge concern for the oil companies. I spoke to one of the oil companies a few years ago, and they were saying that they reckon the average car will be on the road once they've sold it for about 18 years. And so you can model out future oil demand. Now, that was true a few years ago, but today, most cars, I think around 70% are sold by lease. Now, if you've got your lease car and you go back and you go, well, actually, there's this really nice new model. It's super cheap to run. It's actually cheap to operate monthly on a payments basis. I'm going to switch to electric. You could all of a sudden see large numbers of lease internal combustion engine cars handed back and people picking up these new electric vehicle models. Now, if that happens at pace over the next 3, 4, 5 years, we could see a lot more oil demand destruction, not just in the UK, but around Europe, around Asia, and even with the Trump presidency in North America as well. These vehicles are nice to drive. They're cheaper to run and operate. And there, I think we'll see this big pivot. So I've got a lot of optimism that we'll see this big shift. And the same as renewables grow, that we'll see a similar decline in demand for gas as well.
So, Mark, your final 30 seconds, please, of the message which people should take forward if they're quite kind of skeptical about where things are going, the evidence that you've got, the analysis that you've got about how rapidly things are really changing.
Well, just what it boils down to, the evidence we have at Carbon Tracker, others are saying it too, Bloomberg New Energy Finance is saying it's that the oil companies have stopped investing in the way they used to in new exploration. And this is really them admitting that the future for their own sector is very uncertain because the world, thankfully, is actually moving into this clean energy phase that we've all been so looking for the last decade of climate awareness.
And they will be different
Mm.
diminished companies, you're saying?
Well, I believe so. They may still be paying out cash, but they're going to be a lot smaller than they are today, and a lot smaller than they would have been, say, 20 years ago.
Mark, fascinating. Thanks so much for that. You can reference every detail that Mark gave us. A transcript of the podcast is posted, as you always, in parallel on our website, along with contact details for us and Mark at Carbon Tracker Initiative. Do please join us when we have our next conversation on Thinking the Unthinkable. Subscribe to our YouTube channel, where you'll be able to find all podcasts. Very much in the same vein of frankness. From me, Nik Gowing, until the next time, keep thinking unthinkables. More than ever, it's both possible and necessary. From Mark and me, bye-bye.